Hi, and welcome to Random Rogers Big Picture for the week of April 5th. Medical emergency was my father-in-law. It started out looking very bad, then not so bad, and now things are good, and it's only been like 48 hours. So hopefully that works out. Joe Allen spent the night at the hospital on Thursday night. I spent the night there last night, Friday night. And Joellen is still in Phoenix, but is not going to spend the night at the hospital. She has a brother who's about my age. She's going to take a turn tonight doing that. The whole thing, had he followed doctor's instructions, was probably preventable, so hopefully there's a lesson in there for everybody. Okay, let's talk about the stock market, which finished the quarter down about 11%, which is a lot for a quarter. Obviously, 3 weeks prior to that, it was down a lot more. The makings of a record-breaking-ish quarter. You'll forgive me, I don't have all the numbers at my disposal, but you get the idea. Down, 20 whatever percent it was down. That's a historic number. And then there was some snapback. Demand, it's still a bear market until it proves itself otherwise. Fast, furious rallies like we've had tend to happen in bear markets as opposed to the way new bulls start. But we'll see. The one thing I wanted to talk about is just a quick recap on how things went, and more importantly, kind of a focus on the environment, which is, something that I talked about before that I think is crucial to remember. One, about the quarter, so I had a lot of cash and not a lot of financials. So again, for quite a few quarters in a row, the effect is when the market's done, I love this effect, has done this, the portfolio's kind of done that, all the way down or whatever, for over a year now, 15 months or whatever, more than 15 months. Coming on 18 is when we peaked. So, that's all good. If the turn we're experiencing is the real thing, and again, I don't believe that it is. I think it's, some more heartbreak waiting to come. 2 weeks from now, 6 weeks from now, whatever, is, up and then down is what I'm expecting. And then at some point, I don't know if there would be another one after that, but just my opinion, there'll be another fake, at least one more fake out before a bull can start. I don't really know what kind of timeline. I could envision something around late second quarter, which is what I've been talking about for a long time, because that is kind of normal duration ish. It's in the realm of normal duration, let's put it that way. And if people are right about the economy turning up in late 2009 or early 2010, the market turning up around mid-year, June or July, makes sense. I'm pushing that out just a tad. From before, I was thinking, any time in the second quarter, which I'm going to say seems unlikely. But for now, demand for equities is unhealthy. The fixed income market, for the most part, is a mess. These are not new conditions. These have been issues for a long time. And really the best thing, when things aren't working properly for whatever reason, equities, the demand is not healthy for now, the way I look at it. And the fixed income market still just isn't right. There's just an awful lot of moving parts, and they're just not working the way they normally work. And so the best course in that type of environment is just to be patient. That is difficult to do, but the pain of the market dropping it far exceeds the emotion when the market goes up and you feel, whatever it is you might feel when the market goes up, however you want to think of that and describe that. And, it's just, you tend to do more stupid things when you've got big paper losses than when you've got big paper gains. And so the idea is to, one, this is my goal from the start, is to avoid the full brunt of down a lot, And then, if I can smooth out the ride emotionally for clients and also in the portfolio, then that reduces the chance of anyone panicking. And, invariably, people do make panicked decisions and they turn out to be 180 degrees wrong. Part of the job of being, what I do, the financial planners at the firm, and my job as a portfolio manager is to prevent people from doing absolutely the wrong thing at the wrong time. We've done we've been fortunate, done a good job, and, for clients as far as, keeping most of them, the vast majority of them from doing anything they're going to end up regretting. And that's what's important. And that's important for you too. If you manage your own portfolio, during panics down is when the biggest mistakes get made. And there's no way to know whether something is a mistake until after the fact. It's a guarantee that there'll be people that sold out, for what is now the bottom in the 660s, and they won't get back in until it's gone up a lot. It's just human nature. It's what people do. All right, I'm rambling a little bit, so I'm going to cut it short. I'm a little tired. Interestingly, when you sleep in an ICU room, you don't get a whole lot of sleep. Go figure. I would have not have come up with that on my own, but you almost get no sleep. That obviously is kind of sarcasm. Hopefully, that's it. Have a good weekend. Enjoy the sports.